What's going on, everybody? My name is JT, and you are tuned in to The People's Trader, your source of no-nonsense crypto, fundamental analysis, and technical analysis. If that sort of thing tickles your fancy, don't forget to hit the subscribe button, and if you enjoyed the content, leave me a like. Jumping right into the market here. I'm going to skip live coin watch. I'm going to skip the news because we have a pump in Bitcoin right now. Bitcoin is probably, it's got some strength behind it now. You can see that the volume is quite high. We've got a nice breakout. We're probably going to visit 13.5, something like that. But I kind of want to spend the time in this video talking about what I'm seeing from a macro perspective in a lot of these altcoins and what my strategy is going to be going forward. This video is very much so it's very much so directed at my group. YouTube has pretty much shadow banned me at this point. So if you are finding my YouTube channel, hey, awesome. I don't know how, but you found it. That's cool. But yeah, this video is directed towards the group, and I'm going to break things down from a macro perspective and really kind of calm you guys down. Okay, because there's so much hype in the space right now, and we're getting lost in the day-to-day. We're getting we've had such a severe bear market, okay? And what bear markets do to people is they turn people into very aggressive and very reserved traders. We've had a very severe bear market for well over a year. It's been it was a year of downside and a year of nothing, basically. But things are changing, and I'm starting to see that we have some pretty awesome potential inside of the space right now. I am trying to be reserved. I'm trying not to be over bullish because at the end of the day, for me, we have not officially confirmed a bull market until Bitcoin can get above 20K and hold above 20K. That is, for me, the technical indicator that it's game on. But things are changing. Things are looking different, okay? So I want to show you just what it is that I'm seeing so that you guys can really understand what it is that I'm trying to push in the group and how I want you guys to think a little bit more macro, okay? The volatility in this space is insane. The upside potential, the asymmetrical upside of this market is unlike any market that exists today and has ever existed. Bitcoin is the best performing asset, period, ever. And a lot of these altcoins are showing some very good opportunity. So first of all, I just want to go over what my previous strategy was. Okay, I've always kind of taken a step back and taken a look at the market from a macro perspective because it really gets to show you the swings. But let's flip it over to the daily, and let's flip it over to a line chart here. Okay, so Bitcoin is seeing quite a lot of volatility. It's not the best example to show what I'm about to show you. So let's look at something else. Let's look at Ethereum. So this is a much better example. So this is typically what I used to look for, okay? This downward slope and this rounding, and then we have like a double bottom here, okay? We have a double bottom here. From a macro perspective, that indicates to me that we have a floor, so it looks safe to invest. Now, one of my subscribers, Walrus, has, I feel like it was just destined for him to make a comment to Wyckoff. It was a technique that I was familiar with, but I didn't really take a deep dive into it until I saw how applicable and how relevant It is right now in the space. It is showing up everywhere. There are accumulation phases using the Wyckoff theory everywhere in the space right now. And I think that is the play that we need to play right now. We need to find these opportunities in Wyckoff theory and position ourselves into these coins that haven't moved yet. The entire space is going to go up. People are so bullish. People are so hyped on this market, and you have to realize that these whales, a lot of the times, they're the coin developers themselves. They're the market makers. They're the people who own the asset. They're the ones who print the asset. They're the ones who originally invented the asset to begin with. Those are typically the largest holders, and those are the market makers. Okay, when they want to move the price in a certain direction, they can. And that's kind of the ethos of Wyckoff, is it's identifying the price action within an asset that basically indicates to you when there are no more sellers left. And when there's no more sellers left, you get to see the movements of what is referred to as the composite man. The composite man is the market maker. He's the mover. He's the whale. He is the one who is accumulating. And there is a schematic that is very common in Wyckoff. You can see it right here. There's two different versions of this schematic. There's this one and this one. And basically what it's indicating is if your price is following this trend, it's indicating that there are no more sellers in the market. Everybody has sold. You have nothing but holders, hodlers of last resort, if you will. And you have the market makers. And the market makers are in what is called the accumulation phase. There are 4 phases to Wyckoff. There's accumulation, markup, distribution, and markdown. And that's the cycle. And a lot of these assets that are getting a lot of hype right now, they're in markup. The problem with markup is you don't know when markup ends, and you don't know when markup turns into distribution. So what the whales do is they accumulate, they wait for markup to happen, and then they're just looking for signs that markup has concluded and we are in distribution. Once they start to see that we're in distribution, they look for opportunities to offload the asset at a huge markup. So let's just go through a couple examples. Let's just take a look at Raven, okay? Actually, let's go to XLM, because XLM is in the later stages here. So here we are in XLM. I'm not going to do a lot of editing in this video, guys. I'm just going to keep it really raw for you, because like I said, I'm not being shown to a new audience right now, so I'm just going to keep it relatively raw. But basically what you have is you have this markdown, okay? This markdown ends at what is called a preliminary support. That's right here. This is our preliminary support. It looks like we're going to get a bounce, and then we get a fall. We fall through to our seller's climax. So the seller's climax gets marked. I'm going to say, right about there. Okay, seller's climax gets marked, and it's a range. So you have a low end range and a top end range. Let's just zoom in a little here so you can see what I'm looking at. So you can see that the seller's climax, we have the touch points here, kind of fell through, touch points. Wyckoff is not a science, it's an art, okay? You would need to be open to manipulating the lines and interpreting them differently. It's not like a pattern breakout. It's a generalized range. Okay, then we have our automatic rally. That gets marked. Oops, I used the wrong wrong line. I'm gonna try and be as quick and concise because I don't plan on editing this video because I want to get it out to you guys quickly, but yeah, I'll try and be as quick as I can here. So that's our seller's contracts. And then we have our top end of the range here. Okay, so this is the resistance lines. This is the resistance range inside of the Wyckoff. So basically, you know, here's our resistance range, and here is our support range inside of the Wyckoff schematics. And there are 5 phases. There's A, B, C, D, and E. A is basically signaling the end of the markdown. So it happens in between the automatic rally and the peak. We get phase A. I'm going to try and do this quickly, but I want to make it well labeled and everything. So we have phase A, and then phase B is identifying what's referred to as either an LPS, a last point of support, or sometimes you'll get a spring. So in here, we don't have a spring, we just have support. We have our last line of support. We will definitely get into this a little bit more in the group. If you aren't in the Telegram group and you are finding this somehow, please join the Telegram group. It's an awesome community. I'm very educationally based, and we're going to really focus on the macro trend because the trend as it stands right now is shifting quite well. Yeah, we're seeing a down day right now, but from a macro perspective, we're doing just fine, okay? And then we have, so this is our A, B, C is the LPS or the spring, and then we have D, and then D is right before we break out of the box. Okay, let me just mark these down. Get some popcorn, guys, because this one's going to be a long one. Get popcorn, get a notebook. This is a very advanced theory, but it is showing up everywhere. I really need to share it with you guys because before this, I was just looking for bottoming patterns, which are valid. They work all the time. But this just gives you so much more insight and so much more confidence in your ability to identify where in the accumulation we are. Okay, so so XLM is retesting the top of the box, okay? So this is basically the final stage, okay? XLM is a fantastic buy right now. It's a really good buy right now. Not financial advice, but I'm just saying, when these things pop off, they go parabolic from this point on. Accumulation is done. The next step is markup, and markup is what you're seeing in SXP. Markup is what you're seeing in Chainlink. Markup is what you're seeing in Cardano. That's the next phase. I'm going to do a quick comparison, and then I'm going to talk about stop losses because the volatility when Bitcoin makes a move, I mean, we can see that the red is just getting staunch. What's Bitcoin doing? Bitcoin's at 12.4, trying to break 12.5. If it breaks 12.5, it's going to go to 13.5 very quick. So let's talk about how stops behave with an asset that is currently in accumulation versus an asset that is in markup, okay? Because that's going to make it's a huge difference. So here we have Stellar, okay? This one is exiting the box, so it's getting ready to go. What you need to do is you need to find the strongest support in the past year. So what you got to do is you got to put the asset about a year in frame. Okay, a year in frame is right about here. Okay, which is basically the whole accumulation. About a year, okay? And then we're gonna turn on our VPVR. This is our volume profile visible range, okay? And you can see this red line here. This is the the most accumulated zone in the last year. So we're gonna mark that down. You have to get the year in frame for you to get that line because it changes depending on how you zoom in. So I'm gonna mark that line with a horizontal line right here. And as you can see, as I zoom in, that line will change. Go ahead and change. Yeah, you can see that line moves around because it calculates the average of the volume within the price action that's in the frame. So right here is the yearly stop loss, okay? So if we were to fall, we have the most support for the last year. We have the most support on this line right here. And you can see it's been a bounce point. It's been a line of resistance. It's been a line of support. It's a very valid line. So let's do a measurement from where we are right now to that line. It's about a 20% drop to the strongest point of support that we have on this asset in the last year. Now let's compare that to something like waves. Okay, so waves has exited the box. Let's just do a quick like off so I can show you just very quickly. Very quickly, I'll try and make it quick. I apologize for the length of this video, everybody. It is what it is. We have to, I really want to get this point across that this is super valuable information right now. It's super applicable. Okay. This one does not fit very well. Just throwing that out there right now. It's just, you know, these things are theoretical. Basically, you're looking for a top range and a bottom range, and it's okay if your asset pokes through. You will get practice. Once you see this, I know it's just gibberish right now, but once you see this, you can't unsee it. It's really quite amazing stuff. Okay, so here's our phase one. We do have a spring in here. It's kind of a mix between the two schematics. It's a spring, but it's also an LPS because it didn't leave the box. But we have our spring here and our retest. And now we look at what happened when it left the box. You know, it tried to leave the box here, but it was too early. It was only phase B. And then we got into C. C is our spring. Spring is a very tight range that is ascending. We see that in OMG, or not OMG, ONT, ontology right now, is kind of like leaving a spring. And then we have this. This is phase E. No, this is phase D, sorry. Let me move this line. Phase D is our last support, our last point of support. You will sometimes see it leave in D, you sometimes won't, but it hangs out at the top of the box in D, and then phase E is when it breaks out of the box, okay? Okay, so let's get the last year in frame so we can get a measurement. Just call it that right there. Let's draw a line. So if waves was to fall, its worst case scenario theoretically should be that line. That is 64% to the downside. So is that going to happen? Probably not. But the volatility that is involved in waves right now is significantly higher than that of an asset which is either inside of the Wyckoff accumulation box or is just testing the outside of the accumulation box. So basically, it's very hard to not get stopped out on one of these assets that is in markup. Waves is in markup right now. It's super easy to get stopped out of it. Let's take a look at Cardano. I know that Adrian, is it Adrian? Orion? Oh, you're gonna have to tell me how to pronounce it. I'm sorry. He wanted to take a look at Cardano. He was asking if Cardano is in a good. Actually, let's do VeChain. We'll get to Cardano. Don't worry, we'll get to Cardano. Cardano is how I'm going to talk strategy. So let's get into VeChain. So VeChain, I've already got this box drawn. We can, again, let's just zoom out. Let's get the entire year in frame. Oh, so VeChain was added to Binance in August. That's perfect. So we take our horizontal line. That's our support. That's our year-long support. That is our strongest support for the year. Okay. And if we were to fall from this 55 moving average down to that line of support, we're at a 50% retrace. We're super volatile. Now, I'll get into Elliott wave in a second here, but this looks like basically wave one of, or wave two rather, of a 5-wave Elliott cycle. We'll get into that. This is all macro stuff. This is not pattern trading. I know that a lot of you guys are pattern traders. Some of you are just learning from the beginning, and that's great because, it takes time to learn a strategy. So learning this now, I think, is the most applicable based on what I'm seeing in the charts today. Midterm holds in these accumulation zones are where you want to be. Imagine if you bought SXP at 67 cents, because that was the top end of the accumulation box in SXP, 67 cents. If you get hype behind these coins, man, they go fucking parabolic, and then you don't need to trade. You're just holding, and you are playing with the whales. You have the mindset of a whale. All you're doing is moving your stop to a profitable level, and it's not close to the price action. It's not, we'll get into Elliott waves and stuff like that in a moment, but you're basically just monitoring your gains and taking profits at key levels. And then you take those profits and you reinvest those profits into a different asset. And this is going to be, my strategy is going to be an accumulation strategy. We're going to invest, we're going to get our money back, we're going to get more money to play with, and we're going to leave the coins in positions for the duration of the cycle. And we're going to try and repeat the process on as many assets as possible, so that in the event we have a black swan event, whatever coin gets listed, as a reserve currency in Switzerland or whatever, and we just happen to hold that, holy fuck, man. We're in venture capital space, okay? This is a new space. We are in venture capital, and what that means, when macro investors invest in startups, they know that 9 out of 10 of these fail. 9 out of 10 of these startups fail. So they buy 11 because they know that if they hit the nail on the head on the right one, it is going to cover all the losses for all the other ones tenfold. When you get it right, it's phenomenal. And we will have a better understanding as to what assets are going to be right and what assets are going to be wrong as we get further into the cycle. We're just beginning. This is, provided that we continue on the momentum that we're seeing in Bitcoin, and provided that we get above 20K and consolidate above it, holding it as support, confirming the cycle, we are primed for some spectacular gains, okay? And I really want to emphasize that my strategy is a long game. My strategy requires patience, and my strategy is not, looking for setups, posting setups daily, stuff like that. It's going to be, I'm probably not going to be the most popular trading group because I'm going to have more of a macro and conservative approach, whereas everybody wants to get rich quick. Who said, you asked Warren Buffett, what's the secret to the stock market? He just says, well, nobody wants to get rich slowly. And I don't think we're going to be getting rich slowly, but I think that we are definitely going to be trying to do it slower than a lot of our competitor groups and pattern trade groups that are signing themselves up to an obscene amount of risk. We are looking to accumulate. We are looking to ride the waves. We are looking to move our stops to profitable positions. We are looking to diversify. We want to hold as many assets as we can with risking the least amount of capital as possible. So that was kind of a large tangent, and I apologize for that. But where are we with VeChain? What was I trying to say with VeChain? Oh yeah, no, a 50% retracement to get to its strongest point of support. So now let's compare that to something that is inside the box. So I'm looking at Raven right now. Raven's gonna take a while, okay? We're just in phase C. You can see this this is a fantastic schematic, by the way. It's like almost perfect. It is perfect. Like, I'm gonna send this schematic out to you guys in the group. If you're not in the group, join if you wanna get more information on this, but this is A, B, C. This is a perfect example of a spring. And then we're gonna enter D and we're gonna find support. That's gonna be our last point of support. So this right here, if we zoom out of Ravencoin, let's get a year in frame with the VPVR. Let's draw a line. Okay, and now let's zoom back in to our box. Let's turn the VPVR off for a second. So, like, we're not even in the fucking, we're already below, you know, like, this is, it's not moving. What does this candle say? This candle's down 2%. Shit is dumping, guys. Shit is dumping, okay? Algo down 8%. Seller down 7%. One down 10%. Sorry, Edgar. It'll come back. It'll come back. I hope you didn't get stopped out. Wand chain 7%. Yeah, we're seeing like huge. Let's see what SXP is doing. It's probably fucking shit in the bed. 8%. Not terrible. Not terrible. U-Trust is 10%. So these things, you know, they're seeing volatility and they're seeing a lot of downside anytime Bitcoin makes a move. If you get inside of this box, it's 2%. You know, my threshold is anywhere from 20 to 40. Depending on where the support levels are, I will put my stop loss below a 40% retracement. That's me, okay? That's, you know, if you want to play it differently, you can play it differently, but this Wyckoff theory is the key. This is the keystone. This has been the missing thing in my strategy for years. I've always looked for the bottoming patterns, and it's been fantastic, but this Wyckoff accumulation schematic is the next level. This is going to, you learn Wyckoff, you learn pattern trading, and you learn Elliott wave, and you learn Fibonacci. You learn those four things. Oh my God, guys, you're set for life, okay? Like, this will be your job. You will be a trader. That's what you will be able to do. You will just need a computer. I don't even have a computer, I have a tablet. You need a tablet, a phone, and place to live, and that's it. Like, that's all you need. Okay, so now let's get into a couple of these other ones that I'm looking at. So I've been talking about Golem, GNT, BTC. Golem is also in C right now. It's in the spring, okay? And these patterns are fucking everywhere. They take time. So let's see. Okay, Golem is in C. Let's go back to waves. Let's see how much time it took to break out from C. So from the beginning of C to its takeoff took 99 days, okay? 99 days. These things take time. So Golem is actually near kind of the end of the cycle of C, sorry. And that is 52 days. So we got like a month and a half in Golem. But if we're in XLM, XLM's ready to go now. XLM is ready to go now. It is retested the top of the box. We're in phase E in XLM. XLM is ready for takeoff right now. So let's go back to Cardano and let's talk a little bit about take profit strategy. So Cardano BTC. So I've got this one mapped out. Cardano is already in its Elliott wave formation. Okay, so we can see down here we have the Wyckoff box. Okay, this was a hard one. This one didn't really make a lot of sense, but it is what it is. you have to be flexible with your interpretation of the range. There was a fake out in Cardano that was a super, what's the percentage of the fake out? Yeah, so there's like 40% retracement on the fake out in Cardano. But anyways, it did get into phase E. It started testing the upper line of the box, the lower line of the box, and then we had a move to the upside. Once we leave the box, Wyckoff no longer applies, okay? Wyckoff no longer applies when we leave the end of the box. We then move into Elliott wave. So real quick, let's just show you what I mean. And Elliott wave works like this. You get impulse waves, 1, 2, 3, 4, 5, and then you get corrective waves, A, B, C, or some other version of a corrective wave. So I think we're in the impulse for Elliott wave. So we go to the bottom here, and this is 1, 2, 3, 4, potentially, we don't know where the low is, and we could hit 5 all-time high. That's what we could aim for our 5. So based on this single Elliott wave, let's work on a take profit and accumulation strategy. So the first major line of resistance, let's throw back on our VPVR. You can see here's our first line of resistance. You can see the volume profile is sticking out here. So where is it? Where is it? We actually got some here as well. So I went to the top. You could see that this low right here was a line of support, so it then became resistance, and you can see how the first wave reacted to that line of resistance. So we would have set a take profit at a 70% markup. So for easy math, okay, let's just go to my notes for a second. Easy math, okay? Let's say, for argument's sake, that Cardano inside the box costs $1, okay? And we bought 4,000 Cardano, okay? So that is $4,000. We're going to take profits at 3 different levels, okay? And the last level, we're just gonna leave. We're just gonna leave the investment in Cardano and let it ride, okay? So at every stage of take profit, we're going to sell 1,000 ADA, okay? At every take profit level, we're gonna sell 1,000 ADA, okay? So let's go back in. Let me pull up my calculator here. So the first measurement is 70%, okay? This is our first level, our first line of resistance, and this is from the top of the box to the first line of resistance is a 70% increase. So if we sell our $1,000 investment at a 70% increase, we have $1,700, okay? So we made $700 profit at this level, okay? Well, we'll keep the math simple and we'll keep our investment. So we're pulling out $1,700. 1,000 of that is our investment, $700 is profit. So we're pulling out $1,700 at this level, okay? So let's just go. We got $1,700 at level 1, okay? 1, 2, 3. Okay, so then at level 2, we're at 115%. So that is going to be $2,150. So 2,150 is our next take profit level. We went in with, we're selling 1,000 coins and we're pulling out 2,150, okay? Now at take profit 3, we're gonna aim for the all-time high. And like I showed you in the Elliott wave theory, it's more than plausible that we're going to hit the all-time high. And that's just how these assets work. You hit the all-time high, you back test, and then you break through the all-time high and you continue the next cycle. So let's say we target the all-time high, which is 230% from the top of the box. So at 230%, we are looking at, what is that? So let me make sure I get my numbers right here. So 1,000 times 3.3. It's 230%. $3,300. That's what I wrote down, but it was scribbled. So $3,300. That leaves us with $7,150. Okay. We now have our $4,000 back to invest in a different project, preferably one that is still inside the Wyckoff box, and we're leaving $3,150 inside the asset to ride the next cycle. Now here's the fun part about the next cycle is, and this applies to Elliott Wave as well. Oh, so that wasn't even close to the all-time high. Oh, okay. So, but you know what? That's a fantastic area to, that's a good strategy. We got our money back and we got continued. We have more than enough skin in the game, and we're not even close to the all-time high. Okay, so that would be, so we got Elliott Wave. Rambling here, I'm sorry. I usually edit out all this bullshit, but like I said, I feel that this is really important. So 1, 2, 3, 4, 5. Now that's just the single move. We're then gonna have an ABC. ABC corrections are very common in crypto. So we have an A, a B, and a C. Oh, where'd that C go? Come on. ABC correction, okay? From a macro perspective, in Elliott Wave, that whole 1, 2, 3, 4, 5, and that whole ABC is a 1, 2. And then we have our 3 to this high, and then we have our pullback to here, 5. And then we have our 5 to the all-time high. This shit shows up everywhere in a bull market. That's just how it is. So I'm being cautious. Like I said many times in this video, we have not confirmed a bull market. But if we do continue on the trajectory that we're on, I find it entirely feasible, I find it entirely plausible that we can continue with a bull market. So this is the strategy that I'm going to be using going forward. Through the bear market, you have to be a pattern trader. There's no other way about it. You have to have tight stop losses. You have to get in, get out. You got to hold cash a lot of the time, like a large percentage in cash. When you get into a bull market, things change, okay? Because the entire space is growing. We're in a very crazy space, and a lot of people are really bullish. Blockchain is the fucking future, man. Like, this is going to be the way the world works, and a lot of people are going to realize that this cycle, and then a lot of people are going to join late and they're going to get burned, just like a lot of the people that are already in the space have experienced. But at the end of the day, the .com bubble came and went, but we still have websites, we still have Amazon, we still have Facebook, we still have all of these entities. They don't go away. The bubble pops, people lose a bunch of money, and the world continues more educated. And that's what we're going to see. So I hope you guys enjoyed the content. Please leave a like, please subscribe. If you are finding this video somehow and you would like to join the Telegram group, get in now. It starts now it's officially started now until August 23rd. I'll be shutting down the group. I'll be deleting the group on the 23rd. So get in now, get in all the education that you can. And I'm stoked. If this does start to play out the way that I'm seeing early indicators of it playing out, we have an extreme amount of profit ahead of us. And I want you guys to realize that the market is shifting and your strategy has to change. Your strategy has to be constantly dynamic. And being a pattern trader right now, in my opinion, is starting to look as though it's going to result in lost opportunity. So there's a lot to consider. There's a lot of things you have to ask yourself in regards to how much faith do you want to put in this market? Do you want to maybe just hold off? Do you want to try and pattern trade until we hit the all-time highs? That being said, if we hit the all-time highs, guys, there's no more Wyckoff. There's no more Wyckoff. So we're going to, this is what I'm seeing. This is what I feel. If you agree with me, join me on the journey. If you don't, then by all means, there are people making money in this space doing pattern trading, okay? But I don't see it having as much upside potential as having a strategy on your buys and having a strategy on your sells and having a strategy on how to diversify into other assets. So all that being said, I hope you enjoyed this video, raw and kind of uncut, but hey, you know what? I gotta get this info to you guys, and I will see you in the next video. Peace.